All right, Alchemist traders, how's it going? So in this video, what I'm going to be doing is I'm going to break down from a top-down analysis Ethereum from a monthly all the way down to the 1 hour chart of how I analyze the charts. So you can basically understand my perspective in the markets right now. Because guys, I've been getting so many questions and I've got so much slack from people saying, why am I so bullish? And they just don't understand the way that I see the market. So hopefully this will give you a bit more perspective in terms of what I'm seeing. And honestly, I don't care if you guys are bearish. I'm sticking to my guns. I've been in this game for 7 years and I've seen multiple cycles. If this is your first cycle, sit back and watch this video. Now, starting off with the monthly time frame, remember I trade the ICT strategy. So I use a lot of liquidity and I read the markets based on liquidity. Now, we have a high down here, okay? And I'll put this in red. We have a low down here. So we can see on the monthly time frame, we're within this dealing range essentially. What we can see down here is a sweep of liquidity. So I'll put that in dotted line. We had a sweep of liquidity and we had a wick and closed below it. Essentially what this means, and especially because of how we swept this liquidity, and I'm not going to go into the details, but this to me is known as a fake high. Look at what we did down here. Sweep of liquidity, closed below it, fake high, came back up above. Okay. I'm not going to go into too much detail, but that's a fake high in ICT terms. Now, I'm going to mark on now the most recent dealing range. So what we can see down here is the lows down here. And then we have these highs down here. And I'll extend these just a bit more so we can see that on the lower time frame. So these red lines are basically your liquidity points on the monthly time frame. We're going to refine it on the weekly and also the daily. Now, what we can see down here is your inverted fair value gap. We have a higher time frame order block down here, which I will mark on for you guys. Okay, is there anything else? So there's nothing else besides this order block. We've got this fair value gap down here. We have this kind of inverted fair value gap down here, inverse fair value gap, but I'll ignore that. To be honest, I'm going to remove this because there is more on the lower time frame. Okay, essentially what we're looking at right now is within this dealing range from this low to this high. We have an order block down here. And if I make this much more simpler for you guys, we have this dealing range. Anything in green is known as your discount. Anything in red is known as your premium. What you want to understand is whenever we're in the discount side of the dealing range, we want to long positions in green and we want to short positions in red. Now, of course, if we now move up from here, we may have a new dealing range. And then I'll mark in a new dealing range. I'll look for a pullback and I'll move back up because it would essentially move back into the discount side of the dealing range. So just a mini lesson there for you guys. On the weekly time frame, let's see what we're dealing with on the weekly. I'm going to remove this for you guys. So we've got this order block, which essentially is pretty much looking around these areas down here where we had these multiple candles we had wicks to the upside and also to the downside. So this order block down here on the monthly can be refined, and I'm going to refine it on the weekly down here. Now, the second thing that I do is I look for fair value gaps on the lower time frame, weekly time frame. So we've got a fair value gap there. We've got one there, and you can see from here, we tapped into it. We tapped into it down here, and then we closed above. Then we closed right below it and we came into the second fair value gap down here. What else can we see? We can see liquidity in key area, key swing points. So let's mark those on as well. We've got this swing point down here, so we can mark that on with high time frame liquidity. and we have this swing point down here, high time frame liquidity, and we have that area there. So basically, these are your buy side liquidity, this is your sell side liquidity, this is your sell side liquidity. Now, what I want to do is I want to stack further confluences over each other. So we have this fair value gap, this liquidity, sell side liquidity, and we also have this order block down here. This is a stack of confluences. This is essentially what we want to see. There's a high probability area where price is likely going to tap into. Now we can see some areas down here. We have a fair value gap down here. We haven't actually tapped into the 50% of this fair value gap, or have we? Let's just zoom into that and have a look. No, we haven't. So this is known as your consequent encroachment. And essentially what you want to see when you look at a fair value gap is ideally you want to see price come into at least the consequent encroachment, which is your 50% of the fair value gap. Given this hasn't actually tapped into it, there is a possibility that we may tap into this. Okay, so I'm going to I'll remove that, keep that fair value gap down there. And what else can we see? We've got an order block resting down here as well. So we can mark that on with a higher time frame order block. And last but not least, so we have the dealing range from this low to this high, and then we have the monthly dealing range from this low to this high. Now, if we look at this dealing range first, I'm going to put on a fib from A, B. You can see from C, we rejected once of the 61.8 and we closed above. Usually when we get the first rejection of the 61.8 is a fake reaction from it. And we want to see price come in further, deeper. And we've come to 78.6, rejected it once, twice, closed above. Okay. Now, if I move this fib from the swing low on the monthly time frame, we can see we rejected the 61.8 down here, closed above, and we come back into it, closed above. Now, ideally, what I want to see is this sell side liquidity get taken. And the reason I say that is because we have a lot of stacked confluences around this area. Not only that, if we look at the liquidity heat map, we have a lot of positions around these areas where they have their stop losses below down here. So we can see that this is a good area where we want to target. So I'm looking at around the regions of 2,600. Now, if we don't get into that level, we will go in the lower time frame in a second. If we don't go into that level, there's a possibility we will just come in and take out these liquidity points down here, because these are also liquidity points. So 2,700, 2,703, 2,760. Those are the two key areas. If we do come into this area, we want to see how we react from it. Because if we come into it and we completely reject and bounce aggressively above, this will be your sweep of liquidity and a strong low being created. And you want to see how price reacts from that going forward, because that could be your strong low and we'll get the move to the upside. Now, if we do continue moving lower, you already know where we're looking. We want to look at around the 78.6 level, which is aligned with the order block and this fair value gap. So we're looking at around 2,100. I've called it in my channel multiple times on Ethereum. So those are the two key areas we want to look at. Let's go on the daily time frame and see what we can look at now. So on the daily time frame, I'm going to zoom in just to this area. We've got a lot of confluences around here already, and I've marked that on the weekly time frame. But let's look at what we can see right now on the daily time frame. What we can see is that we've got this swing point down here and we've got this swing point down here. So we can put in our dealing range from this high to this low, and I'll do it the opposite way for you guys. So we can put in the dealing range from these areas here. And what we want to know and what you should understand now is anything in red, we want to short, anything in green, we want to long. So when price came into this area down here, we can see that we had order block, rejected it, and we came lower. So given that we rejected that area, and that's also a fib rejection, if I just put in those key levels, pierced into the 78.6, closed below it, and then we continue moving down. Now that we're in this area down here, we had a sweep of liquidity. We've got this low down here. We've got a lower low, higher high, lower high, higher high. Okay, so you can see price is moving upwards like this essentially. So in theory, what we would expect on the daily time frame is for this to continue. And if you join this trend line liquidity, essentially what you want to see is a bounce off this area. In theory, that's what we want to see. But again, the higher time frame, the weekly, the monthly, holds more value. So therefore, even though we're seeing the daily looking bullish, weekly, monthly, there's a possibility of that sweep to the downside. Now, the information that I'm giving you down here is gold. So you want to pay attention to what words I'm using. Okay, so now given that we're in that dealing range, we're in this area, we can look for positions, high risk positions, short and long. And the reason why I say that is because of what's happening right here, right now. We're within this consolidation. I've been shorting and I've been longing around this consolidation on BTC. And it's a very good market to be in positions, to be fair, because you can be in and out, in and out. Now let's look at this dealing range from, remove this, we'll go from here to here, okay? So again, what we can see is we're in the discount side. I want to see price come into the premium side, okay? We've got this fair value gap down here, which is an inverse fair value gap, or you can call it a balanced price range. So that's a possibility that price will come into that level. We've got this fib level down here as well, which matches nicely and stacks nicely with this fair value gap. So there's a short possibility from here. So there's two opportunities that I can see on the daily time frame right now. We'll come up and we'll reject off these key areas down here. The higher time frame will then take over, and then we'll come and sweep these lows down here. We may come even lower, below 2,600 to 2,100, and then we'll get the move to the upside from there. Okay, and then on the 4 hour, so that was option one. Option two on the daily time frame is we don't get that rejection, because what would happen is we won't come up, because the higher time frame, the weekly and the monthly, will hold more value, and we'll move lower from there. Okay, now 4 hour, it begins to get a bit more messier, but there is some form of clarity in the noise as well. What we can see is sweep of liquidity, a move up. Not the best break of market structure. Okay, this is not really a break of market structure in my eyes. So I wouldn't really consider this as a break of market structure. And we've been consolidating ever since. We've got liquidity resting all below down here, liquidity resting above down here. Now, if I zoom in a bit more, let's draw on some of our key PDAs. So we have fair value gap down here. We've got fib from the lows to the highs. And you can see we rejected off 61.8. Are we going to come deeper into this area first, come up, then come down? Possible entry down here, possible entry down here, stop losses below down here. Now, if we come up down here, like I said to you on the daily time frame, possible short entries to go lower. And we will go in the 1 hour, but it gets even more messier, as you can see right now. To be honest, there's not really much to show you on the 1 hour. I don't really want to go lower than the 4 hour right now. But hopefully that gives you an insight into how I view the market and what I'm currently seeing right now. Now, I've had a lot of slack where people are saying that they are bearish. And quite frankly, I don't care if you're bearish. And if price does go bearish, I will still make money. I will just short. I am shorting positions right now as well. So I'm not fussed regardless where it goes. However, I have more conviction that price will move to the upside. I will be releasing an education series shortly. I'm waiting for my website to launch, and I'll share further information with you guys as soon as I make progress on this. To keep you updated, hit the subscribe button, like, share, and comment, and I will keep you updated as we move into the new year. Hope you guys have a good festive season, and I'll see you soon.